Hey guys, welcome back to Leon's Money Flow. This is a channel where I bring you guys along my journey to financial freedom in hopes to inspire some of you guys to start on your own journey too. Last week I showed you what's in my portfolio, and I want to thank you guys for the amazing response. This week I want to dive a little deeper into exactly what each of my ETFs hold and how I'm managing the risks. And I also want to tell you guys how I'm planning to grow my income stream and compound the dividends. Before I dive deeper into my portfolio, I want to remind you guys that this video is for informational and entertainment purposes only. This is not financial advice, and you should always do your own research and due diligence when making investment decisions. Alright, now let's look at my portfolio. You'll notice that the percentages and yield is a little bit different, and that's because I bought some MST the other day when there was a juicy dip. And another reason is because I have a work RSP which I recently transferred to my own broker, and so it's just sitting in cash right now. And I accidentally used that number when, like the cash amount, when calculating all these weight percentages in last week's video. But I should have done that, and now it adds up to 100. This was actually pointed out by a viewer, so thank you for that. Okay, so my first two holdings are USCL and SDA. So for USCL, if we look at the holdings, it's 125% Global X S&P 500 covered call ETF. All right. Well, what's that? Well, if we look at our ETFs and then search for a covered call ETF, I actually have it here. That's USCC. So it's basically it doesn't have the L, doesn't have leverage. And what does this hold? This holds the Global X S&P 500 Index ETF. So I'll save you the searching here. I already know the ticker. It's USSX. The top 5 holdings here are NVIDIA, Microsoft, Apple, Amazon, and Meta. So it's just a basic vanilla S&P 500 index fund. SDA is pretty unique because SDA, QDA, CDA are part of Hamilton's Daymax ETFs, and that means they offer 0DT options, which are basically selling call options every day on a daily time frame instead of your traditional 30 days or something like that. So this will allow them to generate more income on a daily basis. The holdings are 100% Hamilton Champions US Dividend Index ETF, which is another ETF Hamilton has. And it seems like 25% is on VOO, which is your standard S&P 500 index fund. And so actually the covered calls are going to be only written on the VOO portion. And so that means you're going to get 100% or all the growth of the SMVP ETF, which is like the S&P 500. And then you'll also get the income of writing covered calls on the VOO portion of this fund. So let's look at what SMVP is holding, because that sounds a little different than VOO. So SMVP over here is just the blue chip dividend companies. So yeah, it's a little actually lower volatility versus S&P 500, but it has the same or similar long-term growth. So if we look at the holdings top, you have Lowe's, Johnson Johnson, Fastenal, Becton, Dickinson and Co., PepsiCo. Next up, we have QQCL, and QQCL is similar to USCL, but it's just Nasdaq 100. So the holdings are similar. It's gonna be the like the non-leveraged ETF, which is this, yeah, QQCC, and then QQCC will also hold Nasdaq 100 ETF from Global X, which is, I actually forgot what's it called, but we can just search here, search for Nasdaq 100, and it's QQQX. Okay, so QQQX, we'll look at the holdings. Our top 5 is Nvidia, Microsoft, Apple, Broadcom, Amazon. It's very similar to S&P 500, but it's more heavily weighted in technology, almost over 50%, whereas S&P was, I think, 30. So next up is QDay, and QDay is another ZODT option. And the holdings are XLK and QQM, which are ETFs from different fund managers. So XLK here, I just Googled, is, let's see here, except, so XLK, look at the holdings, which is pretty similar to Nasdaq, but it's just pure technology. So top 10 are here. And then QQM is your basic traditional Nasdaq 100 ETF. So I won't go into the holdings there, but that's there's nothing special on that. All right, now moving on to my big yielders, so HHIS. So HHIS is consisting of 15 different companies. The companies are here, and they're also comprised of their own cover called ETFs. So my mom actually is holding this one right now. The next ETF I have here is Biggie, which is from Evolve, which is very similar to HHIS, where the holdings are, there's only 10 holdings, and you'll see it's basically, it's similar to HHIS. It's Tesla, Bounty, Coin, MSTR, and then you have the Magnificent Seven. This one has 33% leverage on it, and so the yield is a little higher than HHIS, and it pays twice a month. So yeah. All right, now moving on to my last Bitcoin ETFs that I hold, which is HBT, HBIX, and also, of course, MSTE. MSTE is actually one of the 15 single stock ETFs that HHIS holds. I just wanted additional exposure to that. So the only holding is MSTR, as it says over here. And HBT are the Bitcoin leaders income ETF. I'm considering just getting rid of HBTE and HBIX just because I want to consolidate my portfolio and I already have Bitcoin exposure in MST. But anyways, the holdings, if we see, are it also has MicroStrategy over here as Block, Coinbase, and some other Bitcoin miners over here. And then if we look at the last one, which is HBIX, that's just on Bitcoin itself, writing cover calls on Bitcoin itself. So if we look at the portfolio, it's just on the iShares Bitcoin ETF, which it just holds Bitcoin. That's probably the biggest Bitcoin ETF in the States. Going back to my portfolio, you see outside of the Bitcoin holdings, it's all pretty much just the index, right? So it's pretty much just index investing. So I have 2 S&P 500 index holdings. I have 2 Nasdaq holdings. I have some concentrated Nasdaq holdings. I call it Magnificent 7, but it's just concentrated Nasdaq. And so the risk, I would say, is I am very comfortable with it. I sleep well. I don't worry at all because index is like holding hundreds of companies, right? And it's just the overall market. And so the overall market is pretty safe compared to single stocks. And also I don't see the S&P 500 going to zero. If S&P 500 goes to zero, we'll be having more bigger problems than the stock market. And I also wanted to point out that all of these ETFs are tax efficient. And what I mean by that is all covered call income in Canada and for these ETFs are mostly capital gains or ROC, which is return of capital. And these are basically the 2 most tax-friendly classifications, meaning that you pay less tax. And I'll be sure to go over this in a future video, but basically you don't need to worry too much about it as a holder, as you have fund managers that are basically optimizing this for you and they have a lot of experience with this. I want to talk a little bit about my strategy now. I don't need the income to live, and so I just been reinvesting as much as I can to compound the growth. And so basically what happens is every month or 2 weeks I get paid either from my job or from these cover call ETFs. Then I pay off my expenses and then I basically go shopping. I see what's on sale and I buy that. I can wait until the ex-dividend day, wait for a dip then, or I can just buy whenever I see fit. And then this will compound my income and allow me to generate more from my portfolio. You can follow me on Blossom and see my live portfolio and trades. Just sign up using my link down below. Tomorrow, I'll be attending Blossom's Investors Tour in downtown Toronto, and this is where I'll be listening to different investing workshops and meeting other finance influencers like Brandon Beavis and Adriano from Passive Income Investing. Seeing Adriano's videos is actually what inspired me to create this channel, and he is definitely my #1 source of income investing information. Both of these guys have great content, and do check them out and let them know that you're from this channel. Comment down below future video suggestions and let me know what you think about my portfolio and my strategy. Also, if you enjoyed this video, give this video a like and subscribe for weekly videos. Be sure to check the description for any links and other resources. See you in the next video.